Good day, Mr. Evan Jamon. I am Rachel Labugen. Since my reporting has no problem or computation, I came up with income statement with a problem, which is trial balance, income statement, single step in income statement, multi-step in income statement, gross profit of gross profit margin. Let me start at my first problem, which is in income statement of Shelly's classic corn. Before that, here's the trial balance of Shelly's classic corn. As you can see, the heading of the income statement, oops, I mean, let's prepare let's prepare the income statement so we can inform how Shelly's classic corn performed for the month of June. Remember, an income statement is for a period of time. Our first step is to determine the value of goods and services that the organization sold provided for a given period of time. These are the inflows to the business, and because the inflows relate to the primary purpose of the business, making and selling popcorn, we classify those items as revenues, sales, or fees earned. For this example, we use revenue. The revenue for Shelly's classic corn for the month of June is 85,000 pesos. And next, we need to show the total expenses for Shelly's classic corn, because Shelly's classic corn track different type of expenses. We need to add the amount to calculate the total of expenses. If you add it correctly, you get total expense for the month of June of 79,200 pesos. The final step is to create a income statement is to determine the amount of the net income or net loss for Shelly's corn. Since revenue are greater than expenses, 79,200 pesos, Shelly's corn has a net income of 5,800 pesos for the month of June. The heading of the income statement includes 3 lines. The first line lists the business name. The middle line indicate the financial statement that is being presented. The last line indicate the time of the financial statement, which is the month of the month ended June 30, 2023. Do not forget the income statement is for period of time. There are 3 columns going from the left to right. The first column is the category, heading, or account. The second column is used when there are numerous accounts in a particular category, such as expenses in our example. The third column is a total column. This is illustration. It is the column where subtotal are listed and net income is determined. Subtracting expenses from revenues. Now, computation of how to get the net income. As you can see earlier, our revenues is 85,000 pesos minus 79,200 pesos of total expense, which is 5,800. Next, Shelly's Football Association income statement for the month ended of April. From the example, you can see that association earned 30,000 from the sales of goods and another 5,000 from the sale of goods and another 5,000 by charging for training. The association spent money various activity to arrive at total expense of 13,450. They gained 2,000 by selling an old van. while facing a loss of 1,000 for settling a spending consumer lawsuit. Now, to calculate the net income, let us enter the values in the following equation. Revenue plus gain expenses plus losses. 35,000 plus 2,000 minus 13,450 minus 1,000 is equal to 22,550, which is our net income. Number 4, Rams Association income statement as of December 31, 2022. Sales 50, materials 8,000, labor 11,000, overhead 6,000, gross margin 25,000. Operating expense, which is selling expenses 9,000, administrative expenses 6,000, depreciation 5,000, operating income is 5,000. Other income and statement, which is interest revenue, which is 5,000, interest expenses, which is negative 10,000, extraordinary items 20,000, income before tax 20,000, income tax 12,750. So our total is our net income is 7,250. Now we can proceed the computation to how to get the net income of Rams Association. By adding the all operation expenses, which are the selling expenses 9,000, administrative expenses 5,000, interest revenue 5,000, total of 20,000, and subtract by income tax, which is 12,750, total of 7,250, which is the total of our net income in Rams Association. Next, problem 5, JQL Corporation income statement December 31, 2019. Sales revenue 100,000, cost of goods sold 60,000, gross profit 40,000, selling, general and administrative expense 25,000, depreciation and amortization 6,000, operating earning 9,000, interest expense 2,300, earning before income tax 6,700, income tax expenses 2,500, net income 4,200. Computation gross profit margin is sales revenue minus cost of goods sold equals 40,000 subtract by divided by sales revenue is equal to 0.4 or 40%. So that's all of my presentation. Thank you.